Privacy has always been an important narrative within crypto. From using Monero to Tornado Cash, there will always be demand for it. Today, we are going to examine a newer coin looking to become a privacy token blue chip. The coin has a strong community and solid fundamental use case and can provide you with great upside as well as income. Today, we are going to be doing a deep dive on the Airtor protocol. Before we start, this is not investment advice and is for educational purposes only. Consult an investment professional for advice and do your own research. The Airtor token, which had its initial coin offering at the end of February, has gone up a staggering 81x to today, meaning that if you invested $1,000 in February, you would have $81,000 today. The coin has a lot of traction and still isn't in the top 250 coins on CoinGecko. It has caught the attention of a few crypto whales, so we are going to take a closer look at why they might like it. Before we start, let's go over what you can expect from this video. We will cover the main thesis behind this token, the tokenomics, also known as what makes the price go up and stay up. We will cover a price prediction based on certain assumptions and risks associated. And at the end, I will give the coin a moon score. These are the main points of the thesis are, firstly, betting on adoption of the ATOR network with the uptick in usage of POU, proof of uptime, POW, proof of work system. Secondly, hardware sales. People valuing privacy and using nodes to provide uptime in return for ATOR tokens. Thirdly, real yield, Web 2 and Web 3 building services on top of the Onion router and paying nodes with ATOR tokens to make the services usable and speedy. In an age of increasing censorship of the internet, people will value privacy more and therefore want to use the Onion router network to use the internet. But there is a big problem for adoption of this network. People are used to high-speed internet, but the Onion router is slow because of the mechanism it uses to keep your data private. Airtor is aiming to make the mechanism Tor uses more efficient through the use of the blockchain. It is planning on paying nodes to increase the throughput of the network through its proof of uptime reward system. This gives a financial incentive for nodes to operate. Before this, they were operating from the goodness of their hearts, which, if we know humans, isn't a very strong incentive. Betting on this coin is a bet on the increasing user adoption of the Tor network and privacy. It is also a bet that people will be willing to support this project with the right incentives. There are a lot of factors that are bringing attention to this project from outside of crypto. Firstly, the importance of privacy and data. Companies, governments, and hackers can weaponize data and use it against us, to sell us things and to find private information that we don't want shared. Secondly, governments are weaponizing money against us with central bank digital currencies, threatening to usher in a new nightmarish version of dystopia. Thirdly, the internet service providers govern the uptime of the internet. They block access to the Onion router network because they assume it is used to surf on the dark web, even though only about 1.5% of traffic on the Onion router goes to the dark web. Next, we will look at hardware. As I said before, it is impossible to scale the network through altruism. That is why ATOR is going to make it easier for less technology-savvy people to participate through the use of routers. The current iteration of the ATOR relay is built for low power consumption and superior return on investment, but in the future it will become modular so that users can upgrade different parts individually. The sale of hardware will be done, and the first 1,000 units will be sold for 0.1 Ethereum plus 250 ATOR. This will fuel demand further for the token. Also, for the initial sale of the relays, there will be an NFT attached that will act as a multiplier for rewards if staked, and can also be redeemed for more hardware. 30% of the sale price will be used to purchase ATOR tokens directly on the open market. This is how you earn income from the project, and partially helps them subsidize the rewards. Airtor protocol team isn't the only possible source of inflows into the ecosystem. Airtor is also making the Tor network feasible for businesses to operate on top of. Third parties who wish to either enhance a new network by onboarding relays or employ relays for a service will be able to buy ATOR and create a service pool to do so. Furthermore, the competition between businesses for relays will mean that pools will need to buy larger amounts of ATOR tokens to reward relay operators with more ATOR to host their services. It would therefore be feasible to see 20–30% of the circulating supply held in these pools, according to the Tokenomics paper. The integration and administration of service pools will be subject to a fee on each distribution, paid to the protocol and relay operators. Now we will look at Web 2 services on TOR. ATOR is built to expand the footprint of the cryptocurrency industry by onboarding traditional internet services into its network. ATOR service pools and marketplaces will allow nodes to offer anonymized, duplicated storage, file sharing, streaming and compute jobs, news and publishing, and peer-to-peer marketplaces. ATOR will host an app store of anonymous services that developers can build on flexibly in accordance with market demands, with the ability to leverage a growing pool of relays with little lift by simply creating a service pool and defining payout requirements. Now we will examine Web 3 services on TOR. The crypto and DeFi community have shown repeatedly to value privacy as they interact with the blockchain, with private swaps and on-chain anonymity a popular utility. However, a cryptocurrency utility cannot truly be anonymized unless both the endpoint and its interaction front end don't expose the user's identity. The revenue from this will go to the DAO, but keeping the price steady or causing appreciation in price will also keep the payouts juicy for the miners. Now that we know a bit about some of the demand and supply forces on this coin, let's do a deeper dive into the tokenomics and emissions. First, we will look at the token unlock schedule. When this project launched, it already had 75% of the coins in circulation. This is good, as no big unlocks will be coming up to significantly decrease the price upon selling. 10% of supply will form the pool of tokens that fund the perpetual tokens rewards for TOR relays. 15% of supply is linearly vested over 18 months, supporting outreach, partnerships, development, listings, and team funds. This is all right, as 15% is pretty high to come on the market within 1.5 years, but it is nothing predatory. The relay reward pool will distribute the most tokens in the first year, and every year the distribution in ATOR tokens will decrease. This creates almost a halvening effect like we see with Bitcoin, and will help price appreciation of the coin for holders and stakers. Now we will look at the supply and demand of the token. What pressures there are on each side. If supply is greater than demand, then the token will go down over time and vice versa. Relays. If there are more relays, less reward per relay, but the same amount of tokens will be given out to incentivize uptime on the network. The more relays there are means the more participants there are, which has an indeterminate effect on price. They underwrite an increase in value of the token over time due to Metcalfe's law. So as more relays come online, the earnings will stay constant or increase. Another source of supply will be traders and investors selling their positions. But this is to be expected. Now we will look at the demand side for the token. Staking will incentivize cash flow investors to invest, as they will be able to get a revenue split from staking their tokens. This is assuming the vote passes in the DAO. Airtor is looking to release their hardware that will help fund the relays and develop the ecosystem further. Relay nodes need a certain amount of tokens to run and receive awards. 100,000 relays are to be sold by prediction. You need 100 ATOR tokens to run a relay node, and need to buy the hardware with ATOR and ETH, so those are two positive forces on the price of ATOR. Staking the ATOR token will enable users to receive revenue share from the project. The company will commit percentage monthly contributions of its hosting revenue up to 50% to a community-run DAO, from which the DAO can commit to revenue share for both stakers and relay operators. Revenue share has not been turned on, but can be voted for by the DAO. There is also an incentive to keep these tokens staked for a longer time, because people who do that get a multiplier on their earnings up to 5.8x. Now to look at the price. Metcalfe's law is a popular valuation technique for valuing network tokens like this. Analysts use this law in models to predict the price of Bitcoin and Ethereum, as well as social networks like Facebook. According to Metcalfe's law, The value of a network is proportional to the square of the number of its connected users or nodes in the network. In the context of cryptocurrencies, the number of users is often represented by the number of active addresses or participants in the network. So if the network is at 100,000 nodes, which the team believes will be sold on the first drop, the value of the network should be around 100,000 squared, which is a 10B market cap, which would put the price of each token at $100. There is a full breakdown of this price prediction thesis in the bio written by Sum Trayder on Medium. Now let's look at risks associated. Firstly, the risk that the team can't deliver on the roadmap. Secondly, no sufficient demand for services based on ATOR. This can stem from bad quality products or poor marketing. Thirdly, the real yield doesn't kick in from recurring services, which messes up their tokenomic model. Fourth is hacks and exploits. A lot of things need to go right for this project to do well. Now let's evaluate Airtor with the Moon score based on a few criteria. For fundamentals and tokenomics, I'm giving this an 8.5 to 10 because it has a tokenomic system that is strong compared to most crypto projects, and the unlock schedule is favorable. However, there are still significant barriers to overcome. Additionally, there aren't any big whales that have huge bags, which is a positive as there is nobody who can rug the chart quickly. Narrative gets a 7. Privacy will always be around, but because it is such a classic, it won't ever get crazy hype. New paradigm, but it will be blue chip type narrative. Community gets a 6 because although they aren't too loud on CT, there will always be a base of people who are interested in this protocol, and there are some crypto OGs that are interested, which holds some weight. Devs get an 8 as they are connected to early Ethereum developers and have strong skills and interest in the area. They are motivated by more than money, which is a big positive. Simplicity gets a 3 as most people will not understand this project unless they put in a substantial amount of time. Thanks for watching. Go check Airtor out on Medium to get their most recent releases. Let me know in the comments if there are other coins that you want me to do a deep dive analysis on. Thanks to the community for answering my questions and Sum Trayder for contextualizing this coin. Don't forget to like and subscribe. Until next time.